My name is Nabila binti Muhammad Fazil.
My name is Ahmad Falah bin Alias. I'm from Class D.
So I will explain about the company background. So first, Schindler Holding Limited was founded in years 1874. The Swiss multinational company which specialized in manufacturing escalators, moving walkways and elevators in whole countries. A company currently available in more than 140 countries and the employees is more than 66,000 persons. There are 7 production facilities located which are Brazil, China, Slovakia, Spain, Switzerland, United States and India. Schindler Group is one of the largest elevators and escalators makers in the world. Schindler elevators and escalators may be found in many public and private buildings, and the business has supplied, installed, modernized, maintained and repaired them. In Malaysia, Schindler's revolutionary mobility solutions may be found in hospitals, airports, government buildings, office, condominium, shopping mall, industry and a variety of other buildings. Next, we move to the management approach. First, factors to consider having a segment reporting. Second, different segments of the business offer different product services. And the third is a segment will be reported if it has at least 10% of the revenues, 10% of the profit of loss, or 10% of the combined asset of the entity. If the total revenue of the segment selected under the preceding criteria comprise of less than 75% of the entity's total revenue, more segment will be. Okay, this is the type of segment. The primary business segment for Schindler is elevators and escalators, which can be shown as below. Next, we move to the Chief of Decision Making, CODM. The CODM of Schindler is also Chief Executive Officer of Schindler Holdings Limited, which is Silvio Napoli. Second is responsibility. First, efficient allocation of resources to assess the performance of the operating segments of an entity. Second is reporting the result of the strategic management process to the board of directors. And third, implement and execute the action plan and monitoring the progress of the plan. Second is reporting the result of the strategic management process to the board of directors. And third, implement and execute the action plan and monitoring the progress of the plan. And last, implement and execute the action plan and monitoring the progress of the plan from time to time.
Below show the segmental report for Schindler for 2021. The segmental report is geographical report. So this is because the company is international company. Process to identify the reportable segment and non-reportable segment. First, identify chief operating decision maker. Second, identify which component of the business are the operating segment. Third, identify of which operating segment requires separate disclosure and reportable segment. Fourth, disclosure segment information using measures reported to management and reconciled to financial statement amounts. Last but not least, provide entity-wide disclosure. Apply 75% threshold test. Since there is only one business segment for Schindler, hence the operating segment for elevators and escalators is 100%, which is more than 75% of threshold. Advantage and disadvantage of segmental report. First, advantage, transparency. It will enable the readers of the financial statement to clearly know which segment is making the highest profit and can make the comparison between the revenue contribution of the segment with the previous year. Second, disadvantage, manipulation of data. The management might manipulate the figure in the segmental report with the objective to attract the investor on the figures as the investor are considered the outsiders of the company and the financial statement is the only reference for investor to refer to.
Assalamualaikum. My name is Muhammad Hilmi bin Zamri and I'm from 4D. Okay, first of all is basis of preparation. The consolidated financial statement are prepared in accordance with International Financial Report Standard (IFRS), which is issued by IESP and together with the Swiss law. Second is the consolidated financial statement is prepared by using the accrual basis of accounting and historical cost approach for those financial instruments which are measured at the fair value. And the last one for basic preparation is the year end of the reporting period of all the group companies Schindler Holding Ltd is 31 December. Next is changes in IFRS. Amendment in IFRS on 1 January 2021 does not cause the material impact for the group's consolidated financial statement. Second, significant assumption and estimation. Below are the three main assumptions which will the significant risk to the material adjustment to the consolidated financial statement. Second is accounting policies applied. For the first in accounting policies applied is scope of consolidation. Consolidated financial statement is prepared based on the direct control and indirect control of the Schindler Holding Ltd, where changes in the interest held in the group companies are recognized as equity transaction provided control is retained. If control is lost, the difference between the consideration received and the net asset disposed of is reported as other income. So the second point for accounting policies applied is translation of foreign currency, which is the functional currency used is CHF, and any transaction which applies the foreign currency will be translated back to CHF based on the currency exchange rate on the transaction date. The exchange rate gain or loss will be recognized at the year end and will be reported under the other comprehensive income. For the third is type of interim report prepare. For our company project, they use the quarterly basis, which is January 2020 to March 2020 for quarter 1, quarter 2 April 2021 to June 2021, and quarter 3 which is July 2021 to September 2021, and lastly the fourth quarter which is October to 2021 and December 2021.
Next is comparative statement for fourth quarter, October to December. For 2021, order intake is 3,128, revenue 2,954, operating profit 253, and in percentage is 8.6%. Adjusted operating profit is 306 and in percentage is 10.4%. Financing and investing activities is negative 11. Profit before tax is 242. Income tax 50. Net profit 192. Earning per share and participation certificate in CHF is 1.64. Cash flow from operating activities is 356. Investment in property, plant and equipment is 35. Recommendation adjustment made by company. First, unrealized foreign currency gain or loss made by quarterly instead of annual basis. The net position for the foreign currency is as follows. For Euro, net position is 234 and sensitivity is 11. For USD, net position is 13 and sensitivity is 1. And for BRL, net position is negative 35 and sensitivity is 2. For CNY, net position is 69 and sensitivity is 6. For INR, net position is negative 5 and there is no sensitivity. Adjustment. Revenue 11,236 minus total operating expenses 10,070. Then you will get operating profit 1,166 plus finance income 32. Unrealized gain from foreign currency exchange is 276. Financial expenses 77. Result from associate 3. Profit before tax for adjustment is 1,400. Minus with income tax is 294, then the net profit is 1,106. Bad debt. Provision of bad debt should be made since the amount of account receivable is high. In this case, 3% of the provision of bad debt can be applied by the company. Hence, the amount of provision of bad debt is CHF2 188 million times 3% equal to CHF 66 million. Trade account receivable for third parties is 2,285. Trade account receivable for associates is 9. Other receivable is 151. Bad debt allowance is negative 257. Total account receivable is 2,188. Adjustment for bad debt. Operating profit is 1,166 minus with finance income 32. Financial expenses 77. Result from associate 3. Bad debt 66. And you will get profit before tax 1,058. Minus with income taxes 222 and the net profit is 836.